It's Accounting Bites, your reconcile and roll out roundup of the week's news in accounting technology with me, Tom Herbert. Thank you very much for watching. And as always, if you'd be kind enough to like, subscribe, or follow, that would be fantastic. Let's get straight into the news, shall we? And where better to start than in MTD Corner? So as the ATT's Emma Rawson wrote for us back on the 12th of August, HMRC has announced that starting in September, it will sign up those taxpayers who should have joined Making Tax Digital in April but haven't yet registered. According to stats published by HMRC, that's almost 300,000 taxpayers. But we were a little bit fuzzy on the details. Well, the ATT has done a bit of HMRC whispering and found out exactly how these taxpayers are going to be signed up. So from September 2026, unregistered taxpayers will be signed up by HMRC. They'll then receive a letter or digital message with next steps, which includes a specific checking step that requires the taxpayer or their agent to confirm HMRC's records are up to date. So the checking step can be carried out by the taxpayer, by their personal tax account or business tax account, or by their agent through the ASA, and just requires them to check and confirm HMRC's information on the active business. If it's not active, you can let HMRC know, but it's not possible to change the name of the business. Here are a couple of screenshots of the checking process on the ASA, and once you've completed it, it lets you know that you need to go off and find compatible software for MTD for income tax, and then submit your updates. Sounds easy, right?
Right.
Now, one figure that wasn't among the statistics published after the end of MTD Q1 was the agent unrepresented split. Well, your intrepid technology editor got in touch with HMRC, who were kind enough to furnish me with that stat. So 69% of registrations, or 393,000 taxpayers, were registered by an agent or representative on behalf of a taxpayer, with around 31%, or 176,000, completed directly by taxpayers themselves. Now, this sounds like a good number for those unrepresented, because I think there are about 200,000 in total. But as an HMRC spokesperson told Accounting Web, it might well have just been a taxpayer had received instruction from a firm on how to sign up and make their own quarterly submissions and done it themselves, but still plan to use an accountant for their final tax return. Now let's get on to the juicy bit, and we've had a bit of a software stramash this week between practice management tools, TaxCalc Engager, and Sodium. So it began when Sodium founder Dwayne Jackson took to LinkedIn to state that a recent change from TaxCalc Engager had made migrating data, specifically forms, so that nice function that allows you to gather client data, well, that export is apparently now encrypted, which means that the data can no longer be imported into other systems. TaxCalc CEO hit back, saying the confusion had just been caused by misinformation posted online. Every customer can export every piece of client data on the platform without restriction to CSV. Nothing has been removed, limited, or changed, and nothing will be. Well, in part 3, Return of the Jackson, Dwayne agreed to disagree, stating that until recently, customers could export the forms they'd set up in Engager in an open transferable format, a JSON, kind of like a CSV, but for more layered information. I'm more of a JSON Donovan fan myself.
Last night you talked about leaving.
And after the change, he's reporting that data is encrypted and can't be used in other systems as no decryption key is provided. Dwayne was also kind enough to send me 2 example files. A quick addendum here, some information that came in after I finished recording, hence I'm on the headset. TaxCalc says it's changed the file format in Engager relating to the forms function, specifically to make it easier to share between Engager accounts if someone had created a form that someone wanted to use and share. They stated that the structure of a client form isn't exactly client data, it's Engager's format, so to class this as restricting client data being exported is a bit of a stretch. It's a bit like if an accounting firm's client left The new accountant doesn't have the right to use the old firm's working papers as their own. Storm in a teacup? I guess it depends which side of the saucer you're on. Let's get into the news now, and HMRC has introduced the pre-population of child benefit information in online self-assessment returns, using the existing information it already holds. The knock-on effect of this is that the high-income child benefit charge can be calculated correctly and reported on time, with around 300,000 taxpayers in self-assessment benefiting from having their or their partner's child benefit payment information pre-populated, making it faster and easier to complete a return. Over on the register, Lindsay Clark reports that the UK government is inviting suppliers to bid to build a new national insurance system with a cheeky price tag of up to £500 million. Companies House continues its overhaul and has come out to state that its gov.uk one login will become the main sign-in option for the Find and Update company information service. The sign-in screen will change in late August, and gov.uk one login will become the main sign-in option. As reported earlier this year, the one login system has had a checkered security past, with a security flaw leaving confidential details of more than 5 million companies at risk, but I'm assured it's all fixed now. Now, Moore Kingston Smith reports that a recent cybersecurity breach has hit Beacon CRM, so a customer information platform used by more than 1,000 charities and not-for-profits, and has resulted in criminals accessing and most probably extracting that information. The Moore Kingston Smith site has a bunch of recommended actions, including working with Beacon and assessing the potential impact on individuals. And due to the sheer volume of reports from this breach, the Charity Commission has also published guidance for charities affected by this cybersecurity incident. Let's head across the pond now for some investment news. And AI accounting startup Rillet has announced a $100 million Series C investment round based on a $1 billion valuation. So this is one of those softwares chasing after the NetSuite Intact prize. It claims it can deploy artificial intelligence to help finance professionals manage a company's books, for instance, automatically and continuously pulling data from sources like Salesforce or Brex. It reports 600 companies. With the size of company in the market, that's a decent number, and says it's doubled its ARR in the past 3 months. Accounts payable solution Basware has announced the acquisition of TrustPair, an enterprise payment fraud prevention tool, and claims the partnership will deliver the industry's first end-to-end assurance from invoice to payment. This from Fortune's Nicholas Gordon, and Airwallex has announced its expansion from cross-border payments to what it calls autonomous finance, with 2 new features, an automated bookkeeping system, and Airy, an agentic consumer wallet designed for one-click checkout. Here in the UK, Modular has become the only non-bank payment service provider with direct access to all 3 major UK payment schemes. Just for the record, Faster Payments, Bax and Chaps. While Forbes' Daniel Van Boom reports that Xero has bumped CEO Sukhinder Singh Cassidy's pay packet up to $18.5 million, a rise of 22%, arguing that this places her on a par with other US tech chiefs. Over on LinkedIn, Tim Warren flags that Xero is finally removing its classic expenses tool, which will be retired in early 2027. They're replacing it with Xero Expenses, which, depending on your plan, you might need to pay for, Xero Files, or a third-party app. Back to the register, and last week I reported on LinkedIn's Looks Like AI slot button, where you can report artificial intelligence content on the platform. Well, looks like that has been pushed more than 1 million times already in the 3 weeks since it's been going. A Bijou AI Inglenook this week, and first up we have Rapodo, which claims to be the world's first AI native audit firm. The Danish number crunchers claim to have built the firm in completely the opposite way to the traditional audit practice. So the machine does the volume, the sampling, the reconciliation, and then the people do the part that decides whether numbers can actually be trusted. And they've landed €8.2 million to do it. Anyway, let's get on to some new stuff, and let's start with Iris, who've added Iris Elements anti-money laundering checks. So they've replaced their standard electronic ID check with an enhanced one that includes PEPs and sanctions monitoring. And they've also redesigned their company's house forms to improve the review and submission journey. Here's a new one from Iris Stablemate Dext, and a new Documents versus Time view in the time spent feature allows you to compare the volume of documents published with the amount of time it took at a practice client and individual level. We mentioned them earlier. Practice management tool Engager has released a new wave of workflow updates. So a new manager column shows who's managed each completed job with a filter to narrow the report down to a single manager's work. There's a full screen preview for proposals and letters of engagement, a new fee review widget on the dashboard, and automatic due dates when bulk enabling services. And here's an update from Practice Management Document Management Tool FYI, who've introduced PDF management in the form of PDF editing and PDF collation directly within the FYI platform. These features support different stages of PDF preparation, from combining separate documents into a single PDF to making final edits and annotations before a document is finalized or sent for signing using your preferred digital signing service. Here's one I missed from earlier this month. It's an update from Float.
Oh, yes. They float.
Oh. Anyway, you can now plan payment runs directly in Float against your live cash flow. No spreadsheet required. So you can group bills by supplier and see exactly who is owed what each week. Quickly defer bills to manage pinch points, keep track of how payment decisions impact the wider cash flow, and share details with relevant teammates to turn the plan into reality. Mid-market cloud accounting tool Sage Intacct has announced an expansion of financial controls and industry capabilities. You've got to scroll quite far down this to get to them, but we have anomaly detection for accounts payable automation, smart reporting for Excel, that's available through an early adopter program in the US and the UK, enhanced billing groups in order entry, a customer payments portal, and much more. Finally, let's get some partnership news, where multi-entity reporting tool Joiin has announced not one, not two, but 4 integrations. So the Exeter-based app has announced data connections with payments tool Stripe and integrations with accounting tools FreeAgent, MyOb, and Zoho Books. This, according to the release, makes it easier for finance teams to report across single and multiple entities, different accounting platforms, currencies, and data sources without relying on manual exports and spreadsheets. And that's your lot for today. Thank you very much for watching. As always, if you'd be kind enough to like, follow, or subscribe, I'd be eternally grateful. And why not sign up for my accounting technology email? It comes at you every Thursday. Pop your email address in the box there, link in the description, hit the yellow button, and you're all signed up. I'll be back next week with another video. Bye for now.